So I'm a big believer in being both proactive and granular. So the whole concept I talk about year-round strategic tax planning. The whole concept of strategic tax planning is that we're being proactive during the year, right? And so I always tell my clients, listen, I want to know before you buy a property, before you sell a property, and before you start renovating a property, because there are strategies that I'm going to want to help you implement during that time to help you with the planning. So I need to know about them in advance. And I just got done doing somebody's taxes the other day who didn't tell me that they had sold the property in advance, didn't realize they had a $300,000+ gain on the sale of that property. And I was like, oh, I wish you had told me, there could have been something we could have done about it. And so it wasn't the best scenario. We could have had a much better, much more high level conversation had I known about it last year when it happened, as opposed to, September 16th. Right. So being proactive, talking to me about, anything, even like major decisions like buying an automobile or buying equipment for your business, those are all things we should be talking about in advance. One of the reasons, just as an example, and some of you on the call may have used this strategy before, but so clients call me and they say, look, we're about to renovate a property. I'm like, great. I said, you need to make a list of everything that you take out of the property and throw in the dumpster, literally, not you personally, the contractor, right? So the reason you want to do this is because let's say you buy a property, right? So basically in cost segregation, there's a thing called an abandonment study, and it means if I'm doing a renovation, what did I remove from the property? So if I buy a property, right, I buy all the things that are inside of it also, right? So if I bought a 10-unit apartment building, I essentially bought 10 kitchens, 10 bathrooms, right? A whole bunch of bedrooms, a lot of closets. So as I'm removing things if I'm doing a renovation and I'm removing, let's say I'm gutting all the kitchens and all the bathrooms, all of those things have some value that needs to be assigned to them. And then you can take a loss on those in the first year on those items that were removed from the property, right? Now, it does reduce the cost basis of the property, but it's an automatic deduction. And for people who are syndicating or using passive investors in their deals, this actually also skirts the passive loss rules so that your investors also get to take advantage of the losses where they might not be able to take advantage of the rental losses or depreciation losses. So this is a really good strategy. So by being proactive, I can tell you how to go about doing that, right? And that should really make a difference. Granular. What I mean by granular is looking into the details of individual transactions. And this is more, this is with clients, but it's also with management companies. Management companies, when you have a management company that is, doing the accounting for your business, a lot of the management companies for the syndication properties that they do, they put a lot of repairs into CapEx, right? And if you put repairs into CapEx, then what you're essentially saying is, I don't want to expense them in first year. I want to take depreciation. I want to depreciate them over 27 and a half years, right? So instead of $100,000 deduction, I'm going to get a $2,700, or whatever, $2,000 deduction, right? Whatever 100,000 divided by 27 and a half is. So what we do is we literally go through the general ledger and try to identify things that actually either qualify as expenses, right? Repair expense doesn't have to be capitalized. It's not a major renovation, project. It's just some repairs that just happen to get put in the wrong place by the management company. So we're looking for those kind of things. So by being granular and maybe spending an extra half an hour going through the general ledger, I've saved clients. I've turned $50,000 worth of capex into $50,000 repair deduction. Right. That on 25%, that's a $12,500 tax savings. Right. So being granular helps. Right. Being detail oriented helps. And same thing. I mean, sometimes I'll just go through people's, on a smaller example, might be going through somebody's meals and entertainment and noticing that now meals and entertainment, if you and I go out to lunch, I buy you lunch, I can only deduct 50% of that lunch, right? Under 2024 tax law. But if I buy lunch for my office staff on a Saturday because they came into the office, that's 100% deductible, right? Same thing, if you've got a construction crew or a group of real estate agents or whatever, and that you're buying them lunch or dinner just to keep them working on something, that's 100% deductible. So by pulling those, being granular enough to go through the general ledger and looking for those things can add up, right? If I find a couple $1,000s worth of that stuff, that's $500 in taxes that you saved, right? So being proactive and being granular are very effective strategies.